Every so often, you get an earnings report that feels like a classic Wall Street tug-of-war. And that's exactly what we've got with Inspirato. On one side, you have management declaring a massive turning point. On the other, well, the market is showing some serious doubt. So let's jump into the numbers and see who's really winning this fight. All right, here's the game plan. First up, we'll look at the headline numbers that seem to be telling two different stories at once. Then, we're going to dig into management's big four-part turnaround strategy. After that, we have to ask, why aren't investors buying it yet? And finally, we'll wrap it all up with our verdict and what to watch for next time. Okay, let's get right into it. The stock took a hit right at the opening bell, and it's pretty easy to see why. This earnings report was practically written for two different companies. It set up an instant showdown between the bulls and the bears. So, right out of the gate, we're looking at a miss on both the top and bottom lines. Revenue came in short of what analysts were hoping for, and adjusted EPS missed by a penny. Now, for a company that's trying to sell this huge turnaround story, well, stumbling on the basics like this, it doesn't exactly build confidence with investors. And this is the number that really got the bears excited. A nearly 20% drop in revenue year over year. I mean, wow. When your sales are falling that fast, it is incredibly tough to stand there and argue that your business has stabilized. And stabilization is the absolute first step in any real turnaround. But wait, management had a rebuttal, and it was a big one. A staggering 97% improvement in adjusted EBITDA. They are basically at breakeven now on that metric. What that tells you is they've gotten incredibly good at controlling their costs. It's a huge leap in efficiency. If you're bull, this is the number you're hanging your hat on.
Okay, so how did management frame all this? Well, on the earnings call, they didn't just explain the numbers. They laid out a whole game plan designed to prove that these efficiency gains aren't just a fluke. They're trying to convince everyone that this is the new foundation for the company.
And it all comes down to these four key pillars. You've got operational efficiency. Keep cutting costs. Then there's brand elevation, making Inspirato feel even more exclusive. Third, a better member experience, which is absolutely key. And finally, a big push on their digital platform to support everything else. Look, it's a solid plan on paper, but hitting all four of those marks at once, that is not an easy thing to pull off. And man, this quote from the CEO says it all, doesn't it? The start of something extraordinary. Notice, he's not saying we're getting back on track or we're stabilizing. Nope, he is framing this as a launch pad, a whole new beginning. That's some serious confidence. Now, the real star of their turnaround show is this redesigned Inspirato Pass. And you really have to understand this. See, the old pass was kind of a money pet. They were basically paying for members to stay at other companies' fancy hotels. The new one, it's a complete flip. It's all about using their own empty rooms and properties. So instead of losing money, they're turning unused inventory into pure profit. It's a brilliant textbook move. So management is painting this really compelling picture, right? But the stock price? It's telling a totally different story. It shows this deep, persistent skepticism. The market is basically sitting back with its arms crossed, saying, yeah, we'll believe it when we see it. It is a classic show me story. And this slide just lays that disconnect bare. You've got management using all these big, exciting words: inflection point, transformation, extraordinary. And then you look at the market's reaction: sleepy trading volume, a falling stock price. The talk and the walk are just not in sync right now. And the chart just spells it out in black and white, down almost 29% in a year. I mean, it's not just that it's losing to the S&P 500, it's getting absolutely crushed by its direct competitors in the travel space. That's a huge red flag for investors. So this really gets us to the heart of the matter. It's the big question the market is asking right now. Can you really cut your way to a higher stock price? Is just being more efficient enough when your actual sales are shrinking and other problems are popping up? The case against the stock, the bear case, is pretty straightforward and honestly pretty strong. You've got four big things. That steep drop in revenue we just talked about. The fact that even with all the cuts, they're still burning through cash. Then you've got the CFO about to leave. I mean, talk about bad timing right in the middle of a turnaround. And maybe most importantly, you have this long, painful history of the stock just getting hammered, which has destroyed a lot of trust. All right, we've heard the bull case from management, and we've heard the bear case from the market. So, what's the verdict? Let's put it all together and figure out what we need to see next quarter to know if this turnaround is for real. Okay, so when that next report drops, here are the 4 things you need to look for. Number 1, free cash flow. Q4 is usually their best quarter, so if they can't post a positive number now, that's a huge problem. Number 2, the new Inspirato Pass. We need to see actual numbers on signups. 3, who's the new CFO? That hire is going to tell us a ton. And finally, the big one, revenue. Have they stopped the bleeding? That's what it all comes down to. So our official rating is market perform. Look, you have to give management credit where it's due. The cost cutting and efficiency gains are real and very impressive. But, and it's a big but, those improvements are getting completely canceled out by that scary revenue decline and all the execution risks. Until they can prove to us, for more than just one quarter, that revenue has stopped falling, we think the stock is just going to be stuck in neutral. And of course, just a final reminder, this is not financial advice.